Among the hardest hit sectors in the markets today, banks, shares of all of the big banks ending lower. This comes on the Federal Reserve and the Senate Banking Committee consider tough new rules to shore up the financial system in the event of another economic downturn. Hampton Pearson takes a look at what the nation's biggest banks could be facing.
Concerns that 6 years after the financial crisis, some American megabanks remain too big to fail now has the Federal Reserve targeting those firms with costly new regulations. At the top of the list, capital surcharges, much higher than what nearly 30 global banks, including 8 U.S. firms, are now paying, based on rules adopted by the international regulators in Basel, Switzerland, a few years ago. Federal Reserve Governor Daniel Tarullo outlined the Fed's plans for the Senate Banking Committee.
By increasing above Basel III levels the amount of common equity required to be held by these firms, we look to improve their resiliency to take account of the impact their failure would have on the financial system.
Another Fed proposal potentially penalizing big banks' use of short-term funding, including overnight loans, could impact broker-dealer operations at the likes of Goldman Sachs and Morgan Stanley. The Fed governor told lawmakers regulators want to avoid the kind of short-term funding collapse that led to the demise of Lehman Brothers in 2008.
The surcharge formula will directly take into account each U.S. G-SIB's reliance on short-term wholesale funding, which we believe to be a very important indicator of systemic importance because of the potential for funding runs and contagion under stress.
Since the financial crisis, U.S. banks have increased capital by nearly $30 billion to cushion the shock from a future meltdown. The financial services industry is concerned this latest proposal from the Fed could put major U.S. banks at a competitive disadvantage.
The Basel process is designed to make it possible for all of the banks across the world to be working off of one set of standards. And when you change the standards for U.S. banks, necessarily that means that they have a higher standard that they have to stand up to than their foreign competitors.
Today, here on Capitol Hill, we got a preview of what to expect once the Federal Reserve makes a formal rule proposal incorporating those new capital banking surcharges. For Nightly Business Report, I'm Hampton Pearson in Washington.